The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginner's Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello and welcome to the Live Beginners Trading course here. I am your host, of course, Robert Blackwell, and I'm pleased and delighted to welcome you to Forex.Academy here and to lesson number 1 of this beginners trading course. Now, before we embark on this journey together, of course, there is financial risk involved, guys, in trading these financial markets. So please be aware of the risks involved and have a quick regard to the following disclaimer. Now, just a few pieces of housekeeping before we begin each and every lesson. Of course, it is a live webinar, so feel free to ask questions throughout. Use the opportunity of an interactive webinar so that we can discuss some of the main topics and issues. And obviously, education is of key importance as a beginner entering these markets. You can locate your chat box there on the right hand side of the screen, so that's effectively where you could input your questions. I'll be able to see them here, and throughout the webinar we'll be able to relate to you there. The live webinar is of course being recorded, so will be available for revision purposes there within your members login area. If you could just allow us 1 hour grace period to actually upload it into the members area, it will be there for revision. And of course we'll have a Q&A question and answer session towards the end of this live webinar, just to discuss some of the main topics, and particularly with lesson 1, it's more of a brief overview to what we'll be looking at throughout the course, and we'll discuss key points or really our objectives for financial trading. So let's delve into the course overview that we can look forward to actually studying this course together over the next 2 weeks. We'll start with today's lesson, the objectives of financial trading. So of course, when we do embark on this journey together, it's very important to assess our role within this industry and to really, I suppose, admit to ourselves really, our profit expectations, our need for education, and really the fact that we can allow ourselves these opportunities, both with the education and the fact that we can go forward to trade products like oil, forex pairs, and really get involved as these markets move every single day. So lesson 2 then we'll discuss what is all the fuss about, and that's when we break down the battle for price. We'll be discussing really price action in terms of Japanese candlesticks, both buying and selling opportunities. So if you weren't fully available to know that we can trade both on the long side, which means we can buy markets and we can sell markets, so actually profit when markets move to the downside. We'll be discussing again things like trading different time periods, momentum, direction, and market sentiment. So really outlining, what is all the fuss about? Why are these markets moving in such a way related to news flow and economic data? And then we'll be discussing the essential knowledge. So we'll start to build upon our own analysis of markets with whether it's sentimental knowledge of markets or whether it's technical analysis or fundamental trading, many different schools of thought there. And then we'll be discussing, I suppose, our own approach to financial markets as economic agents. Are we perhaps irrational traders? Do we trade with the same association of risk or leverage? And then finishing off that lesson with practical elements to trading. So that will just lead us nicely into Thursday's lesson this week will be an actual practical lesson, guys. So you'll really enjoy that. We'll be opening up the MT4 trading platform, placing a few trades, looking at Japanese candlesticks, discussing potentially the oil market, a market like the forex pair, whether it's a euro pound or the pound against the US dollar, and we'll also be looking at some equity indexes as well. So really relating that to the real world example and how those markets actually trade on a daily basis. Then bringing on to next week, we really discuss the trading toolkit. In this case is where we'll start to build upon the previous week's knowledge to flesh out our own ideas of trading and actually opening up the platform itself, looking and discussing market structure, price action charting, and enabling some of that initial technical analysis with the various technical tools and indicators that we can use to supplement trading decisions. One of the key aspects then we'll be moving on to is protecting capital and risk management. So effectively, that's what we do as traders, particularly professional traders. We look to manage risk effectively so that we're not gambling in these markets. We're looking to trade for a consistent period of time, and we need to know how to properly assess the risks involved. So that's a very important lesson there in terms of your own level of risk appetite towards your trading account. Then lesson number 7 will jump into becoming an active trader, and that will be very practical itself. We'll be discussing the different order types that we can use as traders, building upon the early technical analysis that we discussed, and using things like stop losses to effectively manage those risks as well. And that will bring us nicely into finishing the lesson with the trading workshop number 2. Again, we will be opening the MT4 trading platform, placing a few trades in the equity indices, in the Forex pairs, using some technical analysis, looking and observing the study of Japanese candlesticks, and trying to pick some good trades just on the knowledge that we've built throughout this beginner's course. So really that's the point, bringing what we learned throughout these lessons to the practical forefront so that we can place some trades and effectively make some money in the markets, of course, and it'll be quite a practical, enjoyable lesson as well. So let's then begin with today's particular lesson. We'll discuss in fine detail, and it will be quite an interactive discussion, discussion in terms of our own agenda or our own objectives to actually trading these financial markets. So the question I would like to pose here is, why do you want to learn how to trade the financial markets? And I do understand potentially the answer might be very different for many of our students on today's lesson 1. So there's no right or wrong answer, of course. Why do you want to learn how to trade the financial markets? Well, there's potentially a whole plethora of different reasons. One I would certainly assume is the education. You know, it's a very, very valiant pursuit looking to trade these markets. You know, you're going to get a lot from it. You're going to understand why they move. You're going to understand more about your own domestic economy, and you're going to understand more about business in general across Europe. So it's a fantastic educational experience, and really to learn and gain an understanding of the markets, it will help you determine price discovery. Now, the opportunity is, of course, a key factor. So we acknowledge that there's risks inherent in trading the markets, but we want to become students of this risk, of this price action, and look to trade this discovery. And obviously, that leads us into one of the main factors. Of course, as professionals, we're in it for the money. That's really the frank truth I can give you. We're in it for the profit. We need to apply the skills necessary to speculate on opportunity, protect capital, manage risk, and effectively then look to book in profit. So I would say all of those 3 would account for all of the students, hopefully online today, to look to actually gain a level of expertise in these different approaches to actually having an agenda to trade the markets. So let's discuss the lesson outline. With this particular lesson, we will be detailing financial markets and explaining why different market participants are involved, what moves markets. So obviously, different asset classes move to a range of news flow and economic data. We'll be looking at the industry, the financial industry at a glance, and assessing our own role within that industry. We'll be discussing how easy it is to actually access the markets, and some of these topics like leverage and volatility, they actually allow us to trade something like oil, which, you know, isn't the price of a barrel of oil isn't something we can go to the market, to the physical market, and purchase one full barrel of oil and bring it home and look to sell that at a higher price. That's totally irrational. But the fact that we can look for these opportunities, trading these assets across a platform, is very, very advantageous to us. So we'll build upon that with discussing financial derivatives, choosing our favorite derivative, which is a CFD, contract for difference, but discussing, I suppose, the different asset classes, what that relates to in terms of trading these markets and how to select trades, and then finishing off with a bit of a brief discussion on when to trade. You know, is it a good time to trade certain asset classes? Do we involve ourselves in the risks when they're there, and so forth? So a very topical discussion lesson. So do enjoy today's lesson. So again, education is of the key forefront in terms of why we look to build upon our knowledge of the markets, why we're potentially on beginner's trading course. So one thing I would point out is after the financial crisis, there is a real need for financial education. It has grown substantially. People now have a better understanding and more concern over banking and investing and many of the risks that come with making financial decisions. Okay. The growth in online technology has enabled a global community to speculate and assume forms of risk and investment in many different asset classes. And the objective, of course, is to gain a high quality of education and expertise. So, potentially 20 years ago, you were not able to trade the price of cotton or the price of coffee or the price of oil, on these foreign exchanges, of course. Now that's totally available to us with, the growth of online technology. We can simply download, a trading platform, allow a broker to provide us access to these markets and look to profit and speculate. So it's very advantageous in that education. Speculation is, of course, of key importance in contrast to more traditional long-term investing moves. The speculator enjoys jumping in and out of markets more frequently. Markets have become much more efficient so as to move instantly when new information becomes available, and short-term profit making has now developed into a thriving new industry with financial services sector. So that again is very important for many of us. As we go through our education, we will outline to ourselves or understand, well, what type of trader would I prefer to be? Because many traders prefer to actually just get involved with very small risk and make a lot of small, what are called scalp trades, very short term trades, maybe 2 minute, 5 minute trades, and look to profit over a whole range of different asset classes. So that might be available to you as a trader. Capital appreciation is, of course, very important. So it's more concerned with long term growth. Financial markets do present opportunities from demand shifts in a commodity to long-term foreign exchange appreciation from one currency to another. Financial trading offers investment or method not only to protect capital from inflation over the long term, but to deliver a return with the objective of capital appreciation. And one I suppose news flow event that sticks out when I discuss capital appreciation is, of course, the Brexit situation, where I know many retail traders were eager to get involved in trading the price of sterling, considering how it was moving at such a rate. They wanted not only to protect themselves from their own sterling that they had in their accounts there in the UK, but they wanted to profit with these moves. So it's very important to learn how to enable yourself to do so. Capital preservation as well. So the objective here is of course very clear. We're looking to preserve capital. Economic fundamentals like inflation can cause the real value, the true value of your wealth to erode over time. It is often the goal of financial trading to look for safer investment opportunities to store or protect wealth from market uncertainties. So inflation is simply the cost of goods or services rising, and as they do so, the purchasing power of your actual money in your account begins to erode over time. You can learn to actually protect yourself against these risks by trading the markets as well. And of course, one of the main focuses is trading income. That's why many of us speculate in these markets really solely for profit. Natural market forces of supply and demand deliver constant price fluctuations, allowing speculators to enter and exit the market purely for the objective of making a return. So that summarizes kind of different approaches to markets, and it's absolutely fine to have a hybrid of both or a plethora of different advantages there. I would assume many people, of course, want to make money. Many do want to learn more and have that educational experiences as well, and that's something that will be fully available to you here at Forex.Academy. Let's discuss now financial markets explain really what is the purpose of financial markets, what do they facilitate? Well, the first point is price discovery. So if you think of any asset, really, we'll discuss the price of, let me see, the price of aluminium. So we have a metal there, aluminium. Of course, that is dictated between an interaction between buyers and sellers. Buyers come to one side of the market, sellers to the other, and they will interact by trading that metal with each other. And that actually that interaction will lead to price discovery. So whether that's at a marketplace or a financial market, a global financial market, it's the same interaction leading to price discovery. The raising of capital as well. So if we think about capital investment, if we think about a company, but potentially a bank there, will choose Santander as a European leading bank. If it's looking to expand its regional support or potentially move into another region and it's notwithstanding, it will look to actually raise some capital through its investors. So actually look to sell equity or shares, hoping that people will buy these shares, invest in the company, then it can afford to go and do what it needs to do in the market. So the raising of capital is very important to how financial markets operate. The transfer of liquidity, and it simply allows us to trade our capital as flow. So of course, if you think the best example as one firm is perhaps Western Union, one bank that actually trades flow as its main source of business. You know, people want to send money across the different countries to different nations. Of course, if one equity or one business is doing, you know, local business between Switzerland and France there, or Switzerland and Italy, that's going to create a level of capital flow between these local economies. So it's very important that we have this transfer of liquidity. And to support and extend international trade, again, business creation, which does lead into, you know, capital flow again. We want our economies to be strong. You know, we want them to grow as the markets grow, and create businesses so that young startups begin to flourish, that maybe lead to more employment within that local economy, and really create a stronger economy in terms of that business creation within different sectors. So very, very important notes there. Just this is really the construct of financial markets and how they operate. So financial markets are like any other marketplace where buyers and sellers engage in commerce. This interaction between buyers and sellers creates a level of trade, a question of value, and determines price discovery, of course. Price charting then is merely the reflection of this price discovery as agreed fair value. So guys, if you ever have seen a trading platform, or as we go through later lessons, you'll see a price chart. Of course, that is simply a reflection of price discovery in real time, buyers and sellers coming together and dictating price. Price discovery then is often psychological and subject to human emotion. It can at times be totally irrational. And that is the case, of course. If you think of any product even that you're willing to buy, I know that when the iPhone 8 comes out, some youngsters around, you know, teenagers will be very, very eager and have saved up for it. And even if it's priced at €2,000, which may be completely irrational to some people, there will still be buyers who want to purchase that product at that price. So the markets, of course, can be quite psychological, and they can be totally irrational. So that always has to factor into our trading. And asset prices are subject to the laws of supply and demand. This is really what underpins market prices, of course. Apart from, you know, there are an unquantifiable amount of factors that will look to price different assets. However, they'll all relate to the shortage, the scarcity of that demand or supply, and that will create you know, an imbalance between buyers and sellers, which will lead to price discovery as well. So a question I would like to pose is here as we discuss then markets. If we think of different asset classes, potentially forex markets, different commodities like metals, like energy commodities like oil, or soft commodities like the grains, like wheats and sugars. What do you think moves these financial markets? What moves financial markets? Well, a whole range of different factors is the answer. So we have global trade, scarcity of natural resourcing, supply and demand, government policy, of course, the weather, central bank decisions, political instability, and business investment. So there's a whole range of different factors that will look to move any given asset at any given time. So we'll choose some just to discuss here. Central bank decisions, of course, and they look to use fiscal policy and monetary policy to reflect and hopefully monetize currency pairs, whether they you know, introduce new bonds into the market by increasing the money supply, or whether with fiscal policy they're looking to engage in hopefully delivering a better level of employment to the local economy. They can change certain rates within the economy to look to affect different asset classes to change underlying factors. Global trade is, of course, very important there, where we see a large economies, of course, may have a certain commodity which is actually a huge part of their own economy. Canada, for example, it has a very strong economy, dominant, of course, because it is a big exporter of oil, and it uses that global trade to effectively sell its oil across the world, and that creates a level of business across the globe for Canada. So that's fantastic in terms of supporting Canadian local economies. Scarcity of natural resources as well. If you think scarcity, generally, it's just too many people chasing too little goods, and that's more relative to, of course, local and domestic commodities. If we think of wood stocks are coal, iron, gold, of course, oil. These things, when they become much more scarce, well, the price is going to rise because there's not enough of that good. Too many buyers are looking to chase those limited supply of goods. So many different factors there that you can assess and go into a lot much more detail to really assess what moves these financial markets. So let's move on then and really take a seat back, and we can just relax now and really discuss the industry here at a glance. So this is lesson one of the beginner's course. Of course, we're looking to involve ourselves with the pursuit to financial trading. Now, the financial industry itself is relatively large, of course, and there are many different participants in this. It's important to understand at the very start, really, and accept our role as retail traders. In doing this, we will allow ourselves many real advantages when approaching the markets. Okay. One being that we are accepting we are not the smart money and that our need for knowledge and understanding is real. And that is that's a quite a simple approach to the markets at this stage. Now, what I mean by that is that we are not the smart money. It's simply a reflection, comparative reflection to perhaps hedge funds. Hedge funds are large international institutions that, of course, it's their business. It's their main business. They interact. They operate on daily in these financial markets, looking to profit. So they have a level of expertise much greater than ours, and are able to profit as such. So they have a level of competitive edge over us. So competition is strong, and we do not have a trading edge. Very important to understand at this stage. We are small fish and will never be able to move markets. Okay, so that means that because we're such small players, even if we are to purchase or to buy a large contract of one asset, a forex pair or a commodity like oil, we're not actually able to move the price of that market just with our owner. We're just that small, as opposed to a large fund that comes in and wants to buy up a huge portion of the local market. The risks we take must be small in comparison to other market participants. Why do you think that is? Well, it simply relates to the fact that we are retail traders. Of course, we have smaller accounts. So if you're looking to trade the markets and have a €500 account, of course, the risk comparatively should be a lot smaller than other operators in there, perhaps large financial institutions who can afford to take on much more leverage and much more risk. So our risk must be comparatively much smaller. And I have a quote here from a motivational speaker, because I think it's quite important just to accept at this stage. Knowing who you are is the first step to realizing who you want to be. Okay, so I just want to leave that with you there, that we can understand this. We're coming into the beginners trading course. Of course, we want to profit. We want to learn how to profit in these markets. But just for this stage now, knowing who we are, that we are retail traders, beginner traders, we do not have a competitive edge. The fact that we can accept that and move on and start to increase our education is the first step to realizing who we want to be. So a very inspirational quote there that I always take on board. So let's look at this industry at a glance here. So here we have our hierarchy of financial institutions, or market participants. At the top then we have macroeconomic changers. We think of quantitative easing or the bond markets. These are the central banks of the world. Huge money participants when they look to exchange capital or I suppose, change policy that will reflect macroeconomic shifts in our economy. So they are the big players really, and as very small traders, when we look to see how markets move, it is of course central bank decisions or even discussions from central banks that look to move asset prices. The next level, then, we have hedge funds and wealth management, and that is because it is their sole business to interact with the financial markets for profit. They are simply getting involved. They have very well thought out, very well structured ideas to profit. They're looking to mitigate as much risk as possible, but may have multi-million dollar or multi-million euro trades on over a range of different assets at every particular time. So a large amount of capital invested in these markets is as a result of the hedge funds and the wealth management industry. So they're very big players. The next then, institutional trading, one would be more relative to private or retail banking. So things like commodity brokers, pension funds, mutual funds, and investment funds. So if we think of a retail bank, and perhaps Santander or Lloyd's Banking Group or Barclays, they're all retail banks. So they all offer us accounts, domestic accounts that we can have as a cash account that we can choose to bank with them, and they make some money through obviously small interest rate charges or keeping our account available to us. They may charge us just a flat rate for that. So they are involved in retail banking, but of course they make their own trading decisions. They're looking to invest in capital markets and grow. So they're big players as well. Things like pension funds, if you're unaware, that's their sole purpose as well. They need to make a return for their pensionees. So people who have been working for 20, 30 years, who are part of a pension fund, obviously they are hoping to get a level of pension when they retire from their job. Pension funds then invest in the local economy through the equity markets to try and deliver a level of returns so that they can relay that on to their pensionees once the term of their total employment has finished, of course. So again, huge money operators in these financial markets. More on the trading front, proprietary trading is the next level again. So we're thinking prop traders, high frequency traders, algorithmic traders. This is more relative to the city of London, the city of Frankfurt, New York, Dublin, of course. Financial centers where there are a lot of prop trading opportunities, and that's solely their job. Really, they have a level of expertise specific to getting involved in these financial markets solely as they can view they observe how the top three central banks and our institutional traders one and two operate in the markets, and they look to make small profits, obviously, in between these big moves. So they do account for a large amount of capital in the markets as well. And then that brings us to discussing our own role, which we can accept, of course, as retail traders. It may be individual traders. It may be thousands and thousands of global traders or participants across the UK, across Europe, across the globe, simply looking to open up a trading platform, trade the price of oil because they know there's a level of uncertainty, trade their own forex currency to maybe for protection or capital preservation. Everyone has a different view on the markets and, of course, different asset classes, but that is effectively us as retail traders simply looking to involve ourselves in this pursuit of trying to make some profit as these markets move. Okay, so it's very important to understand then that this is an opportunity available to us, and I hope that is our major objective when we go through our education here, that we want to get involved and make money in the markets. It's quite easy to access here, and I'll talk you through some of the main prospects in terms of trading derivatives and actually looking to access these markets. So all we need really in terms of trading is it's online access. It's now very accessible with your computer or laptop there. All we need is a strong internet connection. We can look to start an account with a broker. Those accounts can be spread betting accounts, CFDs, futures, options. Perhaps you like to trade cryptocurrency like Bitcoin. I know a lot of people were quite successful trading Bitcoin over the last 6 months there. And of course, look, most of these markets are open Monday to Friday. Even the Forex markets are open 24 hours a day through those 5 days. So, the markets are always moving across the globe, and we can get involved in this opportunity as much as we like.